1490 WGCH. This is Kerry Lutz with Ty Andros, and we're doing The Wrap. Ty, how you doing today?
Good, Kerry. How are you?
Doing good. Missed this. We haven't done it for a couple of weeks. We've both been kind of snowed under, but I'm glad we're able to catch up today.
Oh, me too. It just, if it's not one thing, it's another, isn't it, Kerry?
Yeah, that's what Rosanna Danis said on Saturday Night Live. There's always something. Right now, the big something in the news, hopefully it's not a distraction for something even bigger, is Liborgate. Can you just explain exactly what that is?
LIBOR and Eurobor are basically the banks charge each other to get loans of a day or a week or a month. And they're used as benchmarks for setting trillions and trillions of dollars of loans and derivatives. So that a basis point here or there, and like for instance in London, it's the average borrowing rate for 20 banks for the different lengths of time. It's now been revealed, although it's been talked about for months, if not years, that they've been posting fake numbers since 2007. They've also said that they were doing it at the behest of the government. And of course, I believe that they're manipulating the rates, and I believe that they did it at the behest of the government. But so far, they've only found, I think it was RBS that they got. And no, it wasn't. It was Barclays. I'm sorry.
Yeah, I think both of them.
Well, yeah, RBS, but they haven't been fined yet. We're virtually all of them. I mean, like literally they had little instant messenger chats, talked about where should we set it for the day. And so it really had no relation to anything. Big thing is that, $700 trillion worth of different instruments key off that. 2 or 3 basis points on 700 trillion, which is where they would float to, is a lot of money.
Oh, yeah.
It's not a small amount, but it's just another example of banks rigging markets against consumers and everybody else. It's I think, a very serious thing. People are trying to say, move along, but
nothing to see here.
Nothing to see here. And of course, that's the story of the age right now. It's felled the head of Barclays and the chairman of the board. But, I wouldn't doubt that 10 or 15, 20 banks are at least pulled into it before it's over, including U.S. banks.
Be naive to think otherwise, wouldn't it?
These people are being discovered for what they are, and they're the most manipulative class in the world. We've talked about the Rothschilds and the powers that be, but people, they are real, and the people who control the money control everything. They control the politics, they control the elites, they control banks and the finance companies. It's just, amazing. And of course, they're fighting for their lives. And so they'll be as ruthless as necessary to preserve themselves. And this is just one gigantic example of it.
Yeah. So how much longer does it go on for? I mean, not only does the emperor have no clothes, but the emperor's had dermabrasion. He's had skin grafts. He's starting to be shown just down to his skeleton. I mean, there's nothing left, not a fig leaf left to hide him.
Oh, Kerry, I'm Austrian, and I will never deviate from this, that it's a currency and financial system extinction event. And we're doing a kabuki dance to that destination. And they're going to print money. They die in waves of insolvency. As von Mises said many, many years ago, he talked about, here, I'll read the quote. There's no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion or later as a final and total catastrophe of the currency system involved. Well, we're in the latter.
Yeah.
Catastrophe unfolds and it's looming. All fiat currency and credit-based financial systems die in waves of insolvency.
So let me ask you a question about that Mises quote, and I'm very familiar with it. I read it 35 years ago, and I've been waiting ever since, and they managed to kick the can down the road. Would you agree that in 1929, they pretty much abandoned currency inflation, and that's why we had that huge credit bust deflation?
I am actually not real familiar with what it was the igniting event in 1929. And, I've read a lot of different stories where they tried to print, and they did print, and other ones where Franklin Delano Roosevelt wanted them liquidated. I really am not qualified to give you an answer there.
Reasonable enough, because there was a big deflation that took place, a huge drop in the money supply, which would be indicative, but perhaps they weren't able to manage the inflation the way that they do today. That's the difference, because now 1929 is the benchmark. Bernanke has said that whatever it takes, he'll provide the liquidity so there's not a collapse of the banking sector like then. We go on to our next topic, which is it looks like some homeowners in California might just get a partial jubilee, huh?
Shades of General Motors, huh?
Yeah.
Where borrowers are stiffed. Residential mortgage-backed securities. They're now in California. The politicians are putting together a new scheme to use eminent domain to confiscate property and then transfer that property to a hedge fund. The hedge fund buys, so let's say the house is 50 cents on the dollar underwater. They'll sell them to him for 30 cents. The residential mortgage-backed security holder who doesn't have a guarantee is given 30 cents on the dollar, and the hedge fund sells it back to the homeowner at 50 cents on the dollar. The homeowner, gets a house that's above water.
Hopefully not as far underwater, right?
Well, I think that they'll make sure that there's equity there, but because they don't want to repeat it. But it's just another theft of from lenders, and we have to remember that during the great deleveraging, which is where we're going now through, it's the credit expansion is crumbling. All debts are paid, and what does that mean? That means that either the lender or the borrower pays. In this case, it was the lender. The idea that the government is facilitating liquidation process and transferring equity to some people were victims, other people were just speculators and they didn't know it.
Well, it's kind of like the dot-com stocks, except that the dot-com stocks, you're in the market and you lose a third overnight, and that's just the way it works. With real estate wasn't supposed to go down, and everybody was sold a bill of goods not to absolve them of responsibility for the ultimate loss, but their loss and the whole real estate boom came about from the unfettered creation of credit by the Fed and by the banks in an unholy alliance, and this is what we wound up with. So everybody's got to take a bite of the sandwich.
Yeah, but the way that they're doing it this time, I just think it's just more getting rid of the rule of law. Getting rid of, common practices and making it up as you go. And, if you don't know the rules of the game, are you going to play?
Yeah, well, you're going to lose if you do. That's like going to play roulette wheel where there's no numbers on the board. And whether you win or lose is totally at the discretion of the croupier. And that's what you're really up against. New financial system.
Yes, it is. You have to wonder how many investors held that, how many pension funds held those. Resolution needs to be a little bit different, but it's got to favor not some hedge fund, but the people who actually did the original lending, doesn't it?
You would think so, but in the final analysis, how many non-Fannie and Freddie loans are really floating around out there? Not as many as you'd think. A lot of them have been bought up by the Fed, so we'll see. It sounds like a good thing, and it sounds like they could do it, but my guess is they won't be able to.
Well, we're going to certainly find out, because they and a number of cities have every intention of doing it.
Problem is, just like the people trying to foreclose on those mortgage notes, on their security interest, nobody really knows who owns the thing. The idea of being able to just commit to eminent domain on a massive scale, I don't think so. I mean, it might happen. It's one thing if you own...
Oh, no, I think they're going to do the eminent domain on one house after another. It's not going to be contiguous. It's going to be, where are you in the equity structure?
I don't know. We'll have to see, because I think from a procedural standpoint, that's really impractical. They need to do it on a mass scale, or they'll never get done with it. It'll never happen. So, but politicians have done worse things, and this is a lot like in the Great Depression, where The state legislatures declared moratoriums on repayment of mortgages and foreclosure moratoriums. We're really not in a different realm as far as that goes. As far as the government actually taking ownership of it through eminent domain, that's a new twist. But they've been interfering with property rights going back to the Depression, and all these schemes tend to do is draw out recession, the Depression, because they stop properties from being put back on the market, and they hinder the functioning of the real estate market. This will be a wait and see type situation, and we'll come back to it. What about this news that the shorts in the silver market, there's a certain bank that we all know and love that is holding 90% of them, did I hear?
That, I can't say 100% because that would be, hyperbole, but Ted Butler is reporting that short interest in silver is the lowest it's been since they've been keeping records, decades. It now turns out that basically JP Morgan is holding there's 15,000 contracts short, and they're holding them all, basically.
When are they getting rid of them?
Oh, never. I think to me, he was reporting how JP Morgan was short at $50 at the plunge protection team, and said how they engineered with the CME the crash, the 35% pullback in 3 days, because they were being killed so badly. They came together with the plunge protection team and the CME and brought it lower. But that's over. I mean, there's no silver out there. They can be short 15,000 contracts, but, someone's got to deliver. And really, silver is in very short supply.
Yeah, so the physical silver market is tight regardless of what we're told.
When things are manipulated lower like that, all it is a great big opportunity, because they won't succeed in the long term, because people have to have that silver to make the iPads and the smartphones and all that stuff. It's so industrialized that sooner or later they have to deliver. And I'm sure it's happening in gold too. I mean, the Asians, they're just taking gold down hand over fist. Central banks have used this pullback to just really hit the buy button.
Really rip it, huh?
Oh man, it's just everywhere. Tons and tons and tons are going out, and they're just trading those little worthless pieces of bologna in for them. I mean, dollars.
So what else is on our agenda here?
Well, we got the Bank of England, writing a check for another 50 billion pounds. So another 75 billion pounds headed into the money supply in the UK. And obviously, everyone knows what's going on in the Eurozone. No one's figured out who's going to pay for the Spanish bank bailout. They don't know where the money's coming from. They don't know when it's coming. But of course, that bailout is, $100 billion is chicken feed compared to what that banking system needs. So it's just another can-kicking exercise, and, it's not going to work, and all of it's not going to work. The only thing that they're going to be able to do is hit the printing press, and they're going to do it sooner or later, but it's just wondering when. Although I got to say this, that some people are calling for fat tails. People like Ray Dalio says they can play this game, but one of these days they're going to misstep, and it's going to happen before they can figure it out.
I think he's right. It's kind of inevitable. There's a certain sense of inevitability about it all, and we know the way this play is going to end, even though we've never seen it before. We've seen others very similar, and they always end the same way. So, Ty, got to get going. TedBits.com, FinancialSurvivalNetwork.com. Hear this and other interviews. It sounds like it's unraveling pretty quickly. So,
I'm just going to put a stick a cherry on it. Basically, we have been building up something for nothing societies for 50 years, and now all the larvae have hatched, and they're going to be just like locusts, and they're going to eat everything. Yeah. They've already consumed everything, but now food's getting short, and they're going to go and consume anything that produces wealth and attack it and destroy it.
Looks like it. Well, on that note, we will see you in Freedom Fest in Las Vegas on July 11th through the 14th. You have a safe trip over there. And if we have time, we'll do an interview on the fly, okay?
Look forward to it, Kerry. Thank you.
All right. Be well.